Right, welcome to Symax Fintech weekly report overview. So, a bit of what happened last week, what's due this week, plenty of chart and analysis, and a bit of a macro outlook as well, just to sort of prepare you for the week ahead. First, I just need to go through our disclaimer. So, trading involves the risk of loss of capital. It's not suitable for everyone, although hopefully it is for you guys. And of course, some companies will provide you with leverage, and just be careful with that because you can lose substantially more than your initial investment. The views, opinions, everything that's contained in this is just to sort of try and help you, sort of let you know what's going on, give you a little bit of insight. And we're not sort of providing you with investment advice or trying to encourage you to trade. That's got to be your decision and your decision alone. Of course, you should carefully consider the risks involved, your financial situation, definitely your level of experience, and also your risk appetite. You should only risk capital that you are prepared, but more importantly, that you can afford to lose. If you've got any doubts whatsoever, seek financial advice, independent financial advice, and I recommend you do that before you start risking your capital. Okay, so let's have a look. Plenty went on last week, and plenty more coming this week as well. So, highlights of last week: the ECB, the Hawks won, and the stimulus is now ending. Rates are set to increase at least for July and September. July at the moment we're expecting 0.25%. September could be 0.25%. It could even be more than 0.25%. Or they might just leave it and extend and do more till the end of the year. So we'll have to wait and see. But the stimulus is finished now, so they're following sort of pretty much most of the rest of the world, except for the likes of Russia and China, by sort of cutting the stimulus and now looking to put rates up. And hopefully they can get them back above zero because they need to. In the US, Friday, mad day. It was a great week last week, but CPI higher, even higher than expected at 8.6%, and the core remained above 6% as well. That's the highest for 40 years. Just a few details. The food was up 1.2%, gasoline up 4.1%, as you can imagine, with oil over $120. Airlines up 12.6%. That's if you can get on a plane, of course. There's lack of workers and other excuses there, which is still making it difficult. And cars up just 1%. And then another sort of impact on the markets Friday was consumer sentiment. A record drop from 58.4 down to 50.2. Above 50 is fine still, but below 50 you start getting into sort of that negative territory. And strong consumer demand is still there. It's outweighing supply. And again, that's one of the issues still, that there's not enough supply of things coming through. And also something else to take note of is that the US 2-year Treasury broke 3%. For other things, World Bank, they cut forecasts for growth to 2.9% from 3.2%. On crypto, Coinbase rescinded around about 300 job offers that they made. Some of them were from major institutions as well. And last week the USD and gold strengthened, and gold, especially on Friday. I mean, it was up. It sort of dropped first on the data, and then it had a massive rally, almost $50 by the end of the day. WTI hit $123. The yen had a small bounce, just as sort of Japan sort of is prepared to try and support the yen, but they still have all this loose stimulus. China was a bit mixed on lockdown. Some areas were released, others were going into lockdowns. And Bitcoin sort of ranging either side of $30,000 at the moment. That doesn't really know where to go. I mean, it has dropped a little bit over the weekend below 28,000, but again, let's just wait and see what happens with that one. We've got some analysis coming up anyway. Key data this week. So in the US, quite a lot. So we've got manufacturing, retail sales, Of course, they're going to help to see that demand, what's going on within that economy, how strong that demand is. Housing data, you expect that to probably drop off a little bit now. Rates are going up, less people can afford to move. Capacity utilization, now that's a good one to watch. Capacity utilization, that's how flat out is industry, and above sort of 84% is considered, where industry is literally going as fast as it can to try and fulfill consumer demand. And then, of course, we've got industrial production. And of course, the highlight of the week for me is going to be Wednesday evening, UK time, with the FOMC. And we're looking at 50 basis points minimum. It could even be 75 basis points. Probably not, but after that strong data on Friday, we'll have to wait and see on that. And there's more and more sentiment leaning towards the potential for stagflation at the moment, and for me personally, next year even a recession. So it's going to depend on how aggressive the Fed is for me. The UK, we've got trade balances, GDP, manufacturing, earnings, and of course we've got the Bank of England this week as well. They're going to raise rates. We're going to have to see by how much. The UK economy is a little bit more delicate than the US one. There's a lot more people feeling the impact of these higher prices, inflation stronger, and just they're just losing their disposable income. They're having to buy a lot more of this, what they really need to buy, such as energy and food, and it's sort of removing a lot of their disposable income. In the EU, we've got CPI out across the week, or part of it. In China, industrial production and retail sales. So it'd be interesting to see how the lockdowns are impacting their economy. And in Australia, unemployment. So a little look at the macro outlook. Inflation's still with us. Each month we keep thinking it's going to peak, but it still remains as strong. Maybe it's just going to plateau now and then start to come off. Consumer demand just surprises me that it is still so strong. But US maybe because they put so much money into the economy. Other countries, I think it's much less. In the UK, certainly. We've got that shrinkflation, where you're paying the same amount, but for less quantity. We've got stagflation and recessions. They're not here with us yet, but I can see them in the future for sure, especially with how aggressive these central banks are being with putting these rates up. Supply chain issues remain. We've got China lockdowns. As I said, some places yes, some places no, but that is going to impact their production and their exports. And of course, the Russian invasion of Ukraine is going into, I think it's its 4th month now, which is crazy. It just doesn't seem that long, but it's still ongoing. And well, what can I say about that? Energy and food price increases still with us. Still that lack of workers, and there's going to be a point where some of the people that are unemployed are going to need to go back just because of these inflation pressures. But of course, with that lack of workers, it does put earnings pressure on. Companies are having to pay higher wages to attract workers. And as I say, some countries, I believe, are going to be heading for recession or stagflation, certainly in 2023. Possibly before, but definitely 2023 for my view. A little trading tip of the week, options. Now, I don't know if you guys have got access to them or whether you do trade them, but certainly if you've got a stock portfolio and you've seen, how much the stocks have come off over the last week, certainly since this year, in fact. And, if you've got that, you can use indices, or you can use indices options to hedge yourself without not having to sort of exit all of your stocks. So, there are other options to you. There are other choices that you've got to protect yourself. And of course, if you don't have a position at all, you can buy call options if you think the market's going to rally. You can buy put options if you think the market will drop. Now, I emphasize the buy of options, because if you're buying options, your risk is limited to your premium. So just a little bit about the options. The strike price is the price that is the basis price for where you're sort of setting your option from, the market price. And it could be in the money, which means it's already in your advantage. It could be at the money, which means, you know, it could go either way, or it could be out of the money where you're trying to save premium, so you get it cheaper. But by getting it cheaper, you're now into that sort of area where the market has to move more in the direction you expect it to before you're going to start to make some money. The premium, the two key pieces of the premium for me: volatility. The more volatile the market, the more the seller's going to demand from you in the way of premium. And the longer you want that option to last for, then again, he's going to charge you more because the more chance you have of being right. If you buy options, your maximum loss is your premium. If you sell options, you've got unlimited risk. Obviously, you know, experienced options traders will know how to manage that. We as Symax Fintech, we hold a one-day course on trading options, and that's for beginners to intermediates. So if you'd like to find out more about how to trade options, you know, they're great, certainly in volatile markets. I've traded loads over the last couple of years because of that volatility. Then you can always reach out to us at info@symaxfintech.com. Okay, so now we're going to move on and do some analysis, which we do on a weekly basis. So first of all, we're going to look at the stocks. Again, just to highlight to you, the blue lines, all they are is just where we've got the trend lines in there, and I put the horizontal lines into where they cut, where they dissect those lines. And the reason for that is it just gives you the prices rather than you having to guess what they're going to be. So this is the Dow Daily. As we can see, you know, the stocks tried to make a recovery, but towards the end of the week, just down, down, down. And, you know, we've got that slight downtrend there that I've identified. And, you know, it's looking, stocks are looking vulnerable. So here's the Dow on a 30-minute. Again, you know, I've got that sort of after it sort of started to move. It couldn't break that on the upside where I've got those resistance levels in, and it's closed quite close to the support line. So it'd be interesting to see how the market opens. S&P daily, you know, stocks are stocks, so they all tend to sort of pretty much follow each other here. So again, we've got the similar sort of thing. I've got some resistance levels in there, got a slight downtrend going on. You know, don't confuse this slight downtrend with the overall long-term uptrend that's been going for over 10 years, though. You know, this is what I'm just seeing shorter term. And again, you know, we've got that sort of down channel. Remember, the blue lines are just sort of cutting through those trend lines just to give you the actual prices. On the 30-minute, similar sort of thing. So we've got some resistance in. Again, we're closed quite close to the support. So we'll see where the market opens Sunday evening, Monday morning. And then sort of, if it breaks them, obviously, we're going to have to look to see where the next levels of support are. Of course, we cover them in our daily newsletter, which is sent straight to your inbox if you'd like to apply for that. Just register.